As you tune into the news, you read the different headlines, you're probably seeing the term recession come up as people are concerned, and now there's increased market volatility. All of a sudden, the emotions start to take over, and people continue to hear the word recession, but I don't know, Art, necessarily if everybody truly knows what that means.
Absolutely, John. It seems like that word gets lobbed out there very commonly as soon as there's a little bit of bad news out there, and it can be scary. We hear that word. A lot of people, I think, have a little PTSD back to like 2008, and even during the pandemic, during 2020, we had a slight recession during that time. So generally speaking, a recession is defined as 2 negative GDP quarters in a row. What is GDP? Gross domestic product. Basically, in its simplest form, is our economy growing or shrinking? So if we have a negative GDP growth, it means we're shrinking slightly as a whole.
Right, exactly. And so with that, though, what I think it's, the first that we've seen in a few years now as far as negative GDP. But with that, really in the first quarter, there was a little bit of chaos going on. I mean, when you look at it with the tariffs, but that changed then with imports and how that all progressed.
Yeah, absolutely. So how GDP is calculated effectively is roughly speaking 2/3 of GDP is you and us spending money. It's consumer consumption, they call it. Going out and buying goods and services domestically in the United States. Then there's government spending, business investments, real estate, some other stuff that makes it up. And then at the end, there's kind of this either addition or subtraction to GDP based on imports and exports. Traditionally, the United States has imported more than we've exported, so there's this reduction off of our GDP, meaning we could all be spending like crazy and buying and actually increasing the GDP, but then let's say we import way more than we export in that quarter, it actually can pull that down, and that's what happened.
Right, and so in that first quarter, what we saw a negative like 0.3% as far as GDP, so nothing too crazy or too out of the ordinary, but on the flip side, you look at maybe some of the more positive economic signs. I mean, you continue to see job growth. There was back in March, I think around, say, 228,000 jobs added. In April then, 177,000. So there's continuing to be new jobs added. So there are some positive things to sort of offset that negative GDP.
Absolutely. What does it feel like? Oftentimes is also what I say too. When we look at the economy, I'm in the cars and love vehicles, and there's always, the horsepower test. So people have dynos and stuff, they can do that. Well, there's also when you sit in the seat of a car and how does it feel? Does it feel like we're going faster? All that sort of stuff. Well, how does the economy feel? Well, one thing to look at is jobs. Right now, there's still hiring, we're hiring, job postings out there. Our unemployment rate is hovering about 4.1, 4.2%. Historical average is around 6. So we're still below normal unemployment rates. Job postings, there's still basically millions of job postings out there that are available for folks if they want to go back to work. So, generally speaking, we don't fall into deep recessions when unemployment is low. Go out to eat, go out and shop and do that stuff. Their stores are busy. Hop on an airplane. Travel is decent. So yeah, there's varying numbers. John, I found it really interesting. In the month of March here in 2025, we had some of the strongest retail sales numbers we've had for some time. So again, if you go into a true recession, generally those things aren't some of the things that are leading headlines as well.
So now sort of shifting the conversation a little bit from, okay, this concept of recession and are we heading there, but ultimately sort of what impact might that have when it comes to your investments and specifically if you're investing for retirement and what does that really look like? Obviously, in the first quarter of 2025, we saw increased volatility in the equity market. So stocks were bouncing around. We saw some big losses in some of the Mag 7 stocks that have been sort of carrying the market for some time, but ultimately sort of what impact does that have on you and specifically when it gets to like your risk tolerance and how much risk you're willing to take?
Absolutely, John. Kind of as we think of the economy, recessions are going to come and go. This isn't the first one, even if we end up in one, I guess I should say, and it likely won't be the last. So your portfolio and your retirement plan need to be modeled so you're comfortable whether we're in a recession or when we're not, because these sometimes can't be predicted and happen very quickly. So if you don't feel confident with your portfolio portfolio, your retirement accounts, it's time to sit down, have a full risk assessment done, and have a proper plan so you can plan to retire well.